Hello, my name is Edward James. I'm the head of content and research at MEED, and this is my colleague, Colin Foreman, the MEED editor. And we're here today to give an urgent market alert on the impact of US tariffs on the GCC and its project market. It's certainly something over the last week that has sprung to attention. It's ever since April the 2nd and Liberation Day in the US and the imposition of these very high tariffs across the world. We've seen a big impact, and here at MEED, we've got some views and thoughts on the situation, and we just wanted to discuss that and give you some of our thoughts and data on what's happening in the market today. This is going to be a fairly brief and quick reaction and first glance at the situation with the imposition of tariffs and what they mean for the GCC and particularly its projects market. And it's in advance of our, which we will have next week, which will be on the 17th of April, will be our full-length webinar looking at the different aspects of the situation and how it impacts the region. So today is just a quick short overview, giving you our first thoughts, our first glance on what's happening in the market. And you can see here on the screen details of that webinar. There's a QR code there. It's going to be at 11 a.m. UAE time next week on the 17th of April. And both Colin and I will be there talking at more length and also taking some of your questions as well. Now, I just to start off, as a first glance and first reaction to the tariffs, I thought it would be useful to summarize the situation and what's happened since the 2nd of April. And of course, President Trump seen here, introduced these tariffs and for every country, almost every country globally. And as a result of these imposition of these tariffs, now importers of products from around the world will now have to pay tariffs at rates set by the US on each country. Some of those rates are from a baseline of 10%. They go all the way up to 50%. With the imposition of these tariffs, importers into the state will have to pay additional import tariffs and customs duties as those set by those tariffs. And of course, the knock-on impact of that is that those products, materials, and equipments and other goods will increase in price, most likely accordingly. And as a knock-on effect of that, there is the potential for increasing inflation, the potential to hamper or hinder economic growth. And while the US government will certainly make a lot of money from these new tariffs, it's essentially the consumers and businesses which will have to bear the brunt of these additional costs. Of course, not everything is impacted by tariffs. Oiling, importantly for the GCC, oil and gas is exempt, as are copper, all pharmaceuticals, energy, as I mentioned, oil, gas, electricity, gold and silver, and certain minerals that are not found in the US. And also importantly, services are not impacted by these new tariffs. Steel and aluminium are also are exempt from these new tariffs. However, they were already subject to a 25% tariff. Now, we've all seen what's happened following this announcement. We've seen heavy falls in the stock exchange, wildly fluctuating currency exchange rates, and of course, and perhaps most importantly for the region, something we want to talk about is the decline in the oil price. So lots to talk about, when we'll talk about that in more detail on the 17th of April, but we just wanted to give you our first thoughts on this. And of course, Colin, looking more specifically at the MENA region, which we're all here to hear about, what do you see is going to happen?
Yeah, well, first of all, I mean, the MENA region didn't really get the brunt of the headlines in terms of the tariffs that were imposed. A lot of it was focused on the Far East and specifically China. So the Middle East skipped some of the bigger headlines that were coming out from there. However, there have been significant tariffs imposed on certain Middle East countries, and that's going to have an issue for trade going forwards. For countries the formula that's been used, that there are some countries that have larger tariffs put on them. So that's Algeria, Egypt, Iraq. And then some of them to get the sort of the flat 10%. So markets that we report on consistently, Saudi Arabia and the UAE, for example, are on the baseline 10%, which is still a significant obstacle for people that would be.
And that's because they've got a much lower trade imbalance with, with the US.
That's exactly right. So from a trade point of view, yes, it's an impact, but as we'll come on to, I think it's the thing that's more interesting for us, and what we'll spend a bit more time talking about, is the uncertainty that this has brought to the global economy at a time when there were signs that it was maybe overheating in some parts of the region, and the implications on what that means for economic growth forecasts, and then crucially for certainly the GCC oil exporters, what that means for oil prices, and then the outlook on projects. So I think there's a lot to unpick there in terms of what the impact of this means for everything that we report on, really.
Yeah, certainly far-reaching implications for not just the oil and gas sector, but and the government revenues and oil prices, but for businesses as a whole, as we've seen in regional stock exchanges, and which have also been affected, just as the global ones.
Yeah, I think it's important to remember as well that really we're just talking about the first move, right? So the US has made the first move. There's you're getting some sense of what people's reactions are. So some people are saying there's retaliation in terms of tariffs. There's other people saying that they're negotiating. And then the thing we're going to have to wait longer to find out is just to see what the trade position is going to be. Are we going to see things like Chinese products being dumped into markets? We've already had a feeling that the Chinese market, the Chinese companies have been aggressively targeting the Middle East market. Are we going to see that trend accelerate in the future? There's a lot of things that are due to happen or could happen going forward. This is really just the opening salvo, really.
Yeah, I mean, it's quite early still to tell the full impact of these tariffs, or indeed whether these tariffs are here to stay or will be lifted, or just kind of a negotiating tactic by the US. Now, I mentioned earlier the oil price. Perhaps one of the most significant impacts of the tariffs is this sudden fall in the oil price. So what's happening there? Why is that happening?
Yeah, well, the oil price has dropped. There's a lot of talk about what OPEC's going to do in terms of production cuts and whether they'll lift that. There's a feeling amongst a lot of the OPEC producers that they're losing market share at the moment, so they want to win back some market share. And then the issue that's caused the drop more recently over the past week or so is that the outlook for economic growth has dipped. So that obviously has a negative impact on the oil price. Whereas the tariff story is a bit unusual for us. I mean, over the last 20 years, we've not had to report too extensively on a massive trade war. What we have reported on before is a drop in oil price. So if we can use history as a guide a little bit, we do get some feeling of what to expect for the region when the oil price does drop significantly. We've had that happen most recently during the COVID-19 pandemic when the WTI dropped to zero. And before that, the sort of late 2014 decline in oil prices, which was an issue that we grappled with really for the next 5 years. And of course, in the global financial crisis, in the aftermath of that, we had a drop in oil prices as well. So we have a lot more as to draw upon when we're talking about what to expect when it comes to a drop in oil price. And as you alluded to earlier, that could mean a cut in government spending as people look to try and get their budgets into place a bit better. So government spending could drop. Government related entities as well, some of their spending could be curtailed as well. That's something that we've seen in the past. So there's quite a big impact there coming through. If the low oil price remains, there is a school of thought that it might come back up again, but that the consensus seems to be that lower oil prices are what to expect for the rest of the year.
Yeah, well, again, it just remains to be seen what the long-term impact of these tariffs are going to be.
Well, I think
not just the oil and gas price, but the macroeconomic situation in the region as a whole.
I mean, I think you've hit the nail on the head there, where you said, well, it remains to be seen. And I think that's, although it's nice to provide people with clarity and tell them exactly what's going on, I think the situation is that nobody really knows what's happening. And as a result of that, when there is that level of uncertainty and people aren't sure what's happening, people hold off on making decisions. Why make a capital expenditure decision today when we really should wait and see what's going to happen later down the line? And I think that's really been the key issue of the past week, is that really the introduction of tariffs is not something that Trump's brought out of nowhere. He's consistently said over the last few years that he's going to do this. He talked about it during his previous presidency. There's even videos of him going back to the 1980s talking about tackling some of these issues.
Right.
So it's been very well signposted for a very long time. I think what's causing the problems at the moment is just the uncertainty and the nature which has been introduced has meant that people can't really plan for what's going ahead. And I think that's going to cause a lot of big business decisions to be.
And that's uncertainty which has caused all this stock market fluctuations, and people now, it's difficult to make investments when you're in this atmosphere and climate of uncertainty.
It's an old cliche, but the markets can handle bad news and they can handle good news, but they can't handle uncertainty.
That's right. Absolutely, completely agree. I just wanted to also touch upon the direct impact of these tariffs and the low oil price on project spending, because I know that's what many of you here listening today are very much focused on. Here, I thought what we'd do is take the MEED projects data of historical contract awards and correlate it or compare it to the oil price. And I think historically, we've seen quite strong correlation between that oil price and overall project spending, as you would expect. The projects market still very much dependent on government spending for the most part, some countries more than others. And so when the oil price is high, governments have more money to spend. But when the oil price is down, then they have much less to spend. And of course, projects are some of the first casualties of that. Now, we can see on this chart, for example, the previous record highs for project spending in the region 2013, 14, 15, the oil price was above $100 a barrel. Then in late 2014, the oil price slumped, and we've seen, as you'll see here on this graph, a big downward spiral for project spending. Between 2016 and 2022, oil price was about $57 a barrel on average, and you can see that project spending was equally down about $130 billion. And then 2022, that oil price went up, 2021, 22, and we see record levels of spending again in 23, 24. So there is a strong correlation. So I think there must be a concern that with oil prices dropping back to those sort of averages, 2016, 22 levels, that there will be a requisite drop in project spending. I think that's the worry everywhere if this lower oil prices were sustained. But there's also a lag, isn't there, on project spending?
Yes, and we've traditionally seen the markets that are more responsive to a lower oil price have been Saudi Arabia and Kuwait, where the economies are less diversified, and a longer time lag, say in Dubai, certainly, where the economy is not so dependent on oil and gas. I think the interesting thing to look for this time around is going to be to see whether that lag is the same as it was in 2014 in Saudi Arabia. I think there's a few factors that are different when you're comparing with 2014, and there's a lot of commitment to do things. But I think the other crucial factor is that there's projects that Saudi Arabia has to deliver. They're committed to hosting a series of major international events, and we saw from 2014 onwards, the two markets that kept on going the best were Qatar and Dubai, because they had major events.
So it's going to underline this prioritization, reprioritization on these event-driven projects, the Expos, the World Cups in Saudi Arabia, the Asian Winter Games, and so on. Other ones which are again going to be prioritized if there is less money to spend.
Yeah, I mean they're priorities anyway, but they're the things that have to go ahead.
So that's it for us on now. We just wanted to give you our first thoughts on the tariff situation. As I mentioned earlier, we are going to have a more detailed webinar for everyone. It's a free webinar, open for everyone to attend next week on the 17th of April, 11 o'clock UAE time. You've got the QR code here on the screen, which you can use to register. You must register to be able to attend it. And Colin and I will be discussing in more depth with more data, more slides on the situation. A lot can happen in a week. So there may be a lot of other things that we can that come up that we can also discuss and analyze, and we'll also have the opportunity to answer some of your questions for those of you who attend. So thank you very much, Colin, and pleasure to be able to give you this quick fire update, and I hope that we both can see you all on the 17th of April. Thank you.